Hi, this is Paul from TradeTheFifth.com. This is a quick video to accompany my article on stop losses and the trading psychology behind it. So I talk about my core trading strategy in that I put my stop loss and entry on first, then I look for my risk to reward and targets afterwards. So the main thing for me is part of my core trading strategy is Elliott wave moves, and I always trade the fifth wave move. So in reality, the simple thing that happens in a trend is that we have a really strong impulse leg, and this wave 3 is the sign of that. Then we have a wave 4 pullback. So using our Elliott wave indicator suite, this is our thinkorswim version. We do also do it for NinjaTrader, TradeStation and multi-charts, but I've already got the support that I found in this. This is HR. This is triggered today. I sent this out on my swing trading membership this morning, but the simple setup for this was we found the support. So when I talk about acceptable loss, if this trade goes against me right now and comes below this wave 4 pivot, I am prepared to get out of this trade because it's broken my rules. Whereas at the moment, I've set a stop loss up at 31.10. The low of the wave 4 was 31.15. So I'm about 5 cents below that wave 4. Give it a little bit of room, but it's fixed in stone now. Then I've got my entry. Where I wanted my entry was above all of these highs during this range bound period at 32.06. Then I put my risk to reward on. Now this is our automated target zone, part of our Elliott wave indicator suite, but my risk to reward, my minimum risk to reward from stop to entry to target is 1 to 1.6, and that's in my target zone. So before I put my risk to reward on, I put my stop on first. Then I've put my entry point in, and then I've measured my risk to reward. The trade is good. So that's probably one of those simplest things that I do, but it's just part of that strategy. Obviously, there's lots of other things to do with this strategy when we're setting up this trade and measuring that wave 4 pullback. But this article was purely about stop losses. And this is just a quick video just to say that now I'm in this trade as well. I will not adjust that stop. The only way I will adjust that stop is up to protect profits on a trailing stop. So this is another example on Match.com. Again, we've had the wave 4 pullback. I found good support. My stop loss goes below my wave 4 low here. 52.18 is my stop loss. This trade hasn't triggered yet. I've put my entry price at 56.14 above all of this noise here, this resistance level. My risk reward is 1 to 2 into the top of the target zone there. So very simple. And that stop loss remains where it is, especially when I go in the trade. I've set it. It's set in stone. I don't have to worry about it. This is the acceptable loss line. If it moves back below here to make a new wave 4 low, I want to be out of the trade, because in reality, when you look at our Elliott wave indicator suite, this could come down into our red zone, and that's a big loss. So I'm prepared to take that loss. If it finds support again, starts to move away from support, I put another trade on with a stop loss, and my only target on that trade is to recover that 100% loss that I've made between stop loss and entry here. So very simple solution. And again, you take those choices away. If it becomes part of your routine, setting up this trade every time, start with the stop loss, put it in. Where's your entry? There it is. What's your risk to reward? Good. That's the last part. Everything else sets up okay. Put the order on with the stop loss as well. And it just keeps that decision away from yourselves because you've put that stop loss on. Okay, so there's just two very simple examples, and very good for swing trading. Again, we've pulled back, we've found support, stop loss goes below the support, it stays there. Okay, so enjoy the rest of your trading day, and I will catch up with you all very soon.